Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to be going over today are some topics related to inflation. I'm going to talk about inflation. I posted an article in the forum earlier in the week. I'd like to talk about it as well as talk about the charts and how the charts are showing us that we have inflation, yet the federal government refuses to acknowledge its existence. In fact, you have central banksters or gangsters like Mario Draghi. He needs to keep rates low per him because he sees no inflation. They're trying to get inflation higher, as well as our central bankster, Jerome Powell. But when you take a look at the real data out there, you could see that inflation is outpacing wages by a long shot, and it's only getting worse. We'll talk about that. Then we're going to segue into how our week was. Then we'll talk about our focus stocks last week that I went over. How were they? How did they do? And then we'll talk about our focus stocks for this coming week. If you're finding us through StockTwits, Twitter, etc., all the symbols that you see on that post will be reviewed in the sequence they are listed on YouTube in the description area below or on the blog, and that should be immediately above this video. Let's get to it. As I mentioned, I posted a chart in the members forum, and it showed wage growth highlighted here in red versus you gotta have. You gotta have your hospital services, you gotta have your car insurance, you gotta have housing. And over a 20-year period, and this is the most worrying here, housing over the past 20 years has underperformed wage growth. That's a good thing, right? That goes to your quality of life, your standard of living. Absent a healthcare issue, of course. But when you take a look at it on a 10-year view, you can see that housing is now outpacing wage growth. I'll post this article in the blog for you to read and to reference back to. It's pretty interesting stuff, and it's kind of disturbing to see. And the source of this data is Nomura and Bloomberg, so independent of the federal government. So you really need to question the accuracy of the numbers from the federal government. And this is not the same calculation they used back in the Jimmy Carter stagflation days. It's a completely different calculation of inflation. And the reason why I'm talking about it is because I'm trying to share with you how I'm viewing this market, how we're trading this market in 2019. We're viewing it from a lens of there is inflation out there. I want to be positioned accordingly. Let's get to the chart. Okay, what you're looking at here is our watch stocks. This is in the members area. Members will update the entry price, target price, and our stop price tomorrow on the week ahead commentary. We'll talk about it, and then I'll update the columns here. And we're going to switch things up. I said I was going to talk about focus stocks from last week first. I'm going to change that because we're on the topic of inflation, and I want to talk about a couple of charts to illustrate my point of why I believe that there is inflation, why the big money does believe there is inflation, and why we should be paying attention to it and position ourselves accordingly. So let's begin with the tips. Treasury inflation protected security, so not a stock, it is a ETF. All right, normally what I would do here is begin with the weekly chart. I'm going to scratch that because something really important happened last week. And before I go to the monthly chart, I want to help people that aren't familiar with tips to help them understand what a tip is. It's a bond. And what it does is it allows you to hedge your portfolio against inflation. So if the tips are rallying, that means that you have money that believes that there is inflation in the system and they are buying tips to protect their portfolio. So now let's go to the monthly chart, and we'll come back to the weekly chart, but I think the monthly chart is a better illustration of where we have been and where we are going. This month, and granted, we still have several trading days left to go before it's in the books, but at current, the month of March 2019, we are breaking out above stiff resistance. We closed out the week last week at 112. The prior high was 111.64 seen last July. And we are breaking out to multi-year highs not seen since here, April of 2013. So this is the market sending us a signal This is why we use charts. And I'm not just talking about daily charts. We want to take a look at the monthly charts, the weekly charts to get that higher level view picture. And you can see overlaid here in gold, in line chart, is gold. And going back to the last time, we paused on rate hikes and then went to rate cuts and then began quantitative easing. You saw the tips rip through the ceiling. And what else joined in on the party? Gold. Tick for tick. Let's go to the weekly chart. On a weekly basis, we cleared 2 resistance levels last week. We sliced through them like a hot knife through butter, and it appears as though we'll probably head higher. Does that mean that we won't pull back and retest this support level here? My guess is that we probably will. So I see no rush to go chasing the tips higher right now. But this chart is an absolute beauty. The monthly chart is an absolute beauty. We'll talk about the daily chart tomorrow with members on the week ahead commentary. RSI, higher lows, higher highs, and breaking out. We closed at the highs of the week last week. That's such a great thing to see. Stochastics, higher highs, higher lows. You may be saying, Bob, it's over 80. That's overbought. I need to short. Don't be crazy. You want to buy when you're over 80. The stochastics can stay overbought for a very long time. It's a signal of strength. Once they begin to break down to put in new lower highs and lower lows, then you may want to consider shorting. Now is not the time. Volume, about average last week. I would like to have seen higher volume given the price action, but I'll take this. This is good. It's rising sequentially. The tips, very strong. So if we like the tips and we're aware that there is inflation in the system, the federal government won't acknowledge it, but the markets are telling us that there is inflation out there. What else do we want to buy? I just gave you a clue on the prior chart. We were taking a look at gold. Let's take a look at gold. I've been a gold bug for a while now. What's gold doing on a monthly basis? It is flirting with a major breakout. We are down so far this month, but we are still flirting with a major breakout. We have our leading indicators. RSI above 50, pulling back now. It could easily resume its uptrend. Stokes above 50, moving up. Good stuff. Now, on a weekly basis, we rallied last week. We closed off the highs of the week. A lot of people like to use 1300 as critical support. Not me. I like 1310. And you could see that 1310 was resistance last week. The high of the week was 1311.60, and we pulled back. 1310 is your number. You see it close above 1310, it's game on for gold. Members will talk about the daily chart of gold tomorrow on the week ahead commentary. The next chart up, the GDX. I was asked by one of our members to go over low volatility relative to the leveraged ETFs gold mining play, and the GDX is probably the best play, but still quite volatile. So just be careful with how much of a position you put on if you are concerned about risk and volatility. So the GDX has clearly broken out above multi-year resistance levels. It did so back in January. We've pulled back. I believe that right now we are putting in higher lows and we are setting up for a breakout. Keep in mind that there's a lot of overhead supply. Buyers back here over the past several years, they're seeing this red entry on their trading platform turn green, and they're not looking to make money. They're seeing the tech stocks rally, and they've seen this GDX red on their portfolio for a couple of years now. They just want their money back, and they're selling into strength. I think it's short-sighted, but I understand where they're coming from. So I drew this up as a sloppy bull flag setup. It's a continuation breakout pattern. Now, what I am concerned with here on GDX is that RSI did break down. We are putting in a higher low. I am watching to see whether or not we break down to a new lower low on a weekly basis. So a bit of a fly in the ointment here. Nothing worth selling my position or lightening up on. I think that the path of least resistance remains higher. I think that the inflation story is one that's just not being told. I think I'm one of the few out there. And I do believe that there is a consensus view by the markets, which is the reason why they rallied last week, that the Federal Reserve is on pause and their next move will be a rate cut. Now, if that's a fact, Why wouldn't gold? Why wouldn't the gold miners rally? The next chart up, OTLK, Outlook Therapeutics, weekly chart. The weekly view is looking very good. We had broken out above resistance here. On the 4th, we had a continuation move higher on the 11th, the week of the 11th. We have since pulled back. We're retesting support. We rallied off the lows last week, which is good stuff. The only concern I have here is that we were unable to close above this resistance level here. So before I bought the shares, I would need to see a continuation move higher on a weekly basis. Other than that, I think that RSI is putting in higher lows and higher highs, so we have momentum. The stochastics, very good. They are poised to probably hook back up here. So the weekly chart is looking very good. Volume was good last week. It was above average. I think that in all probability that we will probably continue higher. I would be looking for a continuation move higher next week. That might cause me to open up a position. I would be looking for a breakout above this upper band of resistance here in blue, and I would be looking to add to that position. Members will be talking about the daily and perhaps the intraday charts tomorrow on the week ahead commentary, so stay tuned for more. Next chart up, UMRX, weekly chart. We have a long consolidation going on here. We bottomed out back in December of 18 with a bullish key reversal, a very tight consolidation. Would I be a buyer here? You could. I mean, as long as you use a stop right below last week's lows, it's game on. It's good stuff. I would keep it small, though. The real name of the game here is to watch for a continuation move higher up and through resistance levels, ideally up and through 4.61 per share. We may do it sooner. So, members, let's talk about the daily charts tomorrow. Let's bring up our Stokes. Slow Stokes are rising. Higher lows, higher highs. That's good stuff. RSI, higher lows. Very close to putting in a new higher high. Volume last week was very good. So UMRX is looking good, worthy of a further deep dive into the daily and perhaps intraday charts tomorrow on the week ahead commentary with members. The next chart up, PICO, Pico Holdings, weekly chart. We have a triangle formation. Last week we had an outside reversal week. Good stuff. One of my favorite candlestick patterns. One of my top 5. RSI putting in higher highs and higher lows. We're looking for a breakout here. Stokes appear poised to want to hook up. That's good stuff. I think we're going to get a continuation move higher either next week or the following week. Volume could have been better. It was below average. Higher lows on Ultimate Oscillator. So members, tomorrow we'll be doing a deep dive into the daily and intraday charts of PICO, and we'll talk about a good strategy for entry. The next chart up, Broadcom, monthly chart. I'm using a monthly chart to illustrate one of the most important factors in my trading decisions, and that is I love stocks with no overhead supply. There is no resistance above. It's called clear blue skies. If you take a look at the watch stocks page in the members area, you'll see under Broadcom, my target price is blue skies, clear blue skies. I'll be updating this tomorrow, but it's ingrained in my DNA. I look for that. It's very important. I think that these shares are probably going a lot higher. Let's go back to the charts. Okay, so Broadcom broke out back here in December, retested the breakout point in January. That set the stage for a move higher. So far this month, we're up 5.42%. Let's go to the weekly chart. Now, on a weekly basis last week, you could see that we had an outside reversal week, a bullish engulfing. Again, one of my top 5 favorite candlestick patterns. And what I really like here about this continuation move higher is that this resistance level at the 260 level was resistance for a long while. We were watching it a couple of months ago, and we cleared resistance in January, the week of January the 22nd. Continuation move higher in the subsequent weeks. Then we pulled back and we did a retest the week of March the 4th. Very, very bullish stuff when you get a retest of a breakout point and then you get an outside reversal week. Folks, this is one of the best patterns. Why? The market sent you a signal. What it told you was that prior resistance was now support. And that was signaled during the week of March the 4th when we did a retest. We're moving higher here. So look at the volume. Great volume last week. Technically a dynamite chart. So members, tomorrow what we'll do is we'll talk about the daily chart and how we would want to time the trade. And we'll update the watch stock page with our stop loss points, price targets, and entry point. The next ETF that we have up here, LABU. This is a ETF that's treated us very, very well in the past. It had a horrible week, the week of March the 4th. But last week, it had an inside week, meaning it gapped up, no new weekly low, and it recaptured a support level. What we'll be looking for is a probable retest of that support level, much as what I just explained about support and resistance on Broadcom. I want to see here. I want the markets to tell me what was resistance is now support. That gives me the green light to buy the shares. RSI moving higher, Stokes moving higher. Don't get hung up on it's above 80, you got to short or you got to sell. Don't get hung up on that. Volume last week was fairly good. It was below average, but it was pretty good volume nonetheless. So tomorrow, members, we will be going over the daily chart on the week ahead commentary. Let's talk about the focus stocks from last week. How were our calls? How did we do? And are we still interested? Let's talk about AutoNation first. I spoke about it last week, and I said that it is very, very close to either being a long or a short. It may sound like, you know what, Bob, you're talking out of both sides of your mouth. And that's a fair argument. It's a fair complaint to make if you want to make that case. Let me explain. What we're doing here, and the reason why I'm saying it's either a long or a short, is that we are retesting a prior low. We closed right at the December lows on Friday. So on a weekly basis, we had a horrible week last week. We were down 2.2%, a bearish key reversal on the week. We were up, we gave up those gains, and we closed right at support. Now, if we make a continuation move lower, forget about getting long. I go pure bear on this stock. If we hold support here, well then, we could make the argument that we may be forming a W formation or a double bottom setup. And I'll be looking for the support level to hold. If it does hold and we see good price action next week, well, then we could open up a small opening position, then put a stop right below 32.87, and then look to add on a rally up and through resistance. So that's what I mean. I can make the case right now for either being bullish or bearish on the shares of AutoNation. Now, the macro view, used car prices are plummeting. They're not doing well. So my guess is that we break and move lower, and it's not a difficult guess to make because what's the trend? What's the macro trend? The macro trend is that we are weak and getting weaker. The path of least resistance is clearly to the downside. It doesn't take a genius to make the guess that in all probability, we're going to break and move lower here. But if it holds, well then, maybe the market's sending us a signal and we should consider a long trade. I do not love the fact that Stokes are declining and down below 50. What happens when you get a situation like this? It played itself out last week. We got a rally. What happened to that rally? It faded. That's why you never, ever, ever chase the shares of a stock when you have your Stokes that are moving downward and below 50. That's when you watch your Stokes and you should fear rather than hope. Let's move on to the other watch stocks from last week. Okay, so Shopify last week, it was clearly a continuation move higher play. The week of March the 4th, we had pulled back. We held the 180 level. Last week, we got a continuation move higher. I think that these shares will probably continue to move higher as well. I remain bullish. We had good volume last week. MACD histogram continues to press higher. I will caution that we did close out the week above the 2 standard deviation Bollinger Band. So relative to that Bollinger Band, we're a bit extended here. So I wouldn't be the least bit surprised to see a bit of a pause, sideways price action, and then a resumption of the uptrend. And looking at a daily chart, you could see that on Friday, we had an inside day. This is a bit of a concern. So I'm a little bit cautious on a daily basis on Shopify. We may just get a pullback here, an orderly pullback, and then perhaps a resumption of the uptrend. So we're still watching Shopify. I'm not as bullish as I was last weekend. I mean, come on. It rallied 8.5% last week, so I think that we made a good call last week, and we may just need to digest some of those gains. The next chart up, which I spoke about last week, was Google. It had broken out the week of the 25th of February, the week of the 4th, where the markets were under pressure. Google closed up higher. Yes, it closed off the highs of the week, but it retested support and it held. Last week, we got a continuation move higher, so this watch stock returned 3.51% on the week. Volume was about average. So Google will, in all probability, press higher, assuming that the markets continue to behave well. The next chart up, Kimco Realty. This was another watch stock. Now, it did have a very good week last week in that it did close up nearly 2% on the week. What I was watching for was a breakout of this bull flag setup. We didn't get it. We were rejected. This is why I always like, if I'm using weekly charts to make my decisions of as to whether or not I want to make the trade, many times I will watch the shares, especially on Friday. I want to see how we are closing out the week. So while I remain bullish on Kimco, I'm not ready to buy right now. Why? It's because we closed right at resistance and we saw some selling at the $18 per share level. The macro view here, I'm still bullish on the shares. Why? We have an inverted head and shoulders setup. Left shoulder, head, right shoulder, and we've broken out above the neckline. And we did so several weeks ago. I think that this is a continuation breakout trade. The problem for the shares of KIM are the exact opposite of what you're seeing with Broadcom. Kimco has a lot of overhead supply, whereas Broadcom has clear blue skies, no overhead resistance, and you have to deal with that. Stokes are looking good. They're leveling off. I think that they're going to hook back up. We have higher lows on RSI, good stuff. So Kimco is still a watch stock. The next chart up, Sina. I discussed this in a similar fashion as I discussed AutoNation last week. I was looking for either a continuation move lower, or for, in the case of Sina, to retest the support level and hold. Now, the prior week, this is the chart I was looking at, and the case could have been made that, you know what, there was serious problems with Sina and wouldn't have been the least bit shocking to see a continuation move lower. It didn't happen. We gapped up last week after retesting not one support level, but two support levels the prior week. We had a doji star formation. That's a sign of indecision. So the longer that we trade above this support level, the more bullish I become. That bullishness ends if we break this support level, because that would be a breakout point failure, meaning we broke out back here the week of February the 11th, rallied, pulled back, and if we fail to hold these support levels, it's all over. In all probability, we're going to take out 51.76. Now, technically, you have your moving averages, your 50-period moving average, and your 200-period moving average. In all probability, you're going to have a negative divergence of the two. That's going to add some pressure to the shares. Stokes are rolling over. You have your fast line down below the 50 level. That's a concern. Rallies tend to fade when you have a setup like this, so be careful. Members, we'll talk about the daily chart of Sina tomorrow on the weekend commentary. The next chart up, Baidu. Now, Baidu we were looking at as well as a potential long or as a potential short moving into the trading week. It all depended upon what the markets were telling us. Would the market send us a signal, meaning we had broken down below this lower band of support 2 weeks ago, and we were very close to flirting with the lows of December. If we take out those lows, it's a short all day long. So we're looking at it as a potential short, but I warned, if we rallied back and we recaptured the support level, forget about the short side for now anyway. And last week we were able to rally back above and close above, more importantly, prior support. So members, we'll talk about the daily chart of Baidu tomorrow, but let's stick with the weekly chart for a moment. We have a higher low forming an RSI, and in fact, we broke out last week. We have higher lows on Stokes. No breakout yet, but they're looking pretty good. So Baidu, an interesting stock as we proceed into the new trading week. Folks, if you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, that's cool. Enter your email address anywhere on the website. You'll get my commentary as well as videos regarding my 5 most powerful candlesticks. Everybody have a great St. Patrick's Day and enjoy the remainder of your weekend. Members, I will talk to you tomorrow, and I'll see you in the forum.